Well, all you have to do is look at the deliveries in gold and silver in the last 2.5 months. These are the big bullion banks, the huge financial institutions moving, tens of billions of dollars worth of gold and silver. They're moving it for a reason.
This is Kaiser Johnson with Liberty and Finance. With premiums on US 90% silver constitutional coinage at multi-year lows, this may be an ideal time to swap silver bars or rounds for 90% silver and gain all the benefits of US mint lineage, legal tender status, non-reportability, and fractional utility. So right now we're running a special where we will swap any of your silver bars or rounds for 90% constitutional silver at a minimal premium difference. Call us for details.
Welcome back to Liberty and Finance. We're delighted to have this widely followed returning guest. Ed Steer has been doing analysis of the metals markets longer than most of us have been around. He was introduced to us by our mutual, dear departed friend, Ted Butler. We're grateful, Ed, for your visiting here again with us on Liberty and Finance.
Well, I'm glad to be on your show again, Donegan.
I should mention this is Monday, March 17, 2025. That may or may not be especially relevant depending on some of the topics that we discuss. In the past, you have helped us see the intense, concentrated short position on the COMEX market in particular for silver and also for gold. And we've been hearing a lot recently about incredible outflows of physical metal from London to New York, and then some of it flowing straight through in and out of the COMEX and people standing for physical delivery on the COMEX. But backlogs of delivery times from London, normally 1 to 2 to 3 days, normal delivery times being as long as 6 to 8 weeks. And some people have called that a de facto default of the London market. Could we get your perspective on this physical metal flow across the Atlantic? And then we can zoom in on the COMEX market second to that.
Okay, well, boy, I'll tell you what, this thing all started to blow up in January, and in my column, I've used the opening line of a song from 1967. Some of you may not remember it, but it was by Buffalo Springfield from a song called What It's Worth, and the first line said, "There's something happening here, but what it is ain't exactly clear." Okay, and that pretty much sums up what's going on right now. The amount of gold flowing into the COMEX in New York and also into GLD, and the gold and silver flying in from into New York, and it's not just from London. It's London's the main one, of course, but I think it was I can't remember, January, February. It came in from like 15 or 20 different countries. The flows into the United States, they were from London and Switzerland and Australia and Canada and South Africa. Nick Laird had a whole list of them on my that he put up, and it was in my newsletter. It was a whole pile of countries, not just London, where all of a sudden, boom, all of this gold started flowing. It's been ongoing since, it started in December, but it really became noticeable in January, and because it's a non-scheduled delivery month for gold. And in January, and I just figured this out the other day, there were 11,284,000 ounces of gold shipped into the COMEX in January. I mean, that's unprecedented. And along with that, 1,122,000 were shipped out. And in silver, it's even more ridiculous. There was 45 what the heck is this? 45 million, here we go, 45.251 million ounces of silver flown from, there was a whole list of countries, but the main one was London, of course, flown from London into New York, and 7 million ounces of silver was shipped out in January. I mean, January is not a delivery month for silver either, but it was just like unbelievable. And in February, which is a delivery month for gold, but not silver, in February, there was 8,793,000 ounces of gold shipped into the COMEX and 1,839,000 shipped out. But in silver was even more ridiculous. There was 58.5 million ounces of silver flown into the COMEX in February alone. I mean, these are unprecedented historic numbers. I mean, we had a big inflow back in 2020 was the last big year we had, but nothing comparable to this. It's just off the charts. Nobody knows what it means, but it does mean something. And like I said, there's something happening here, but what it ain't exactly clear. But any of us can do is speculate, sit here and watch and just see how this pans out. But, there's something is definitely afoot in the precious metals market.
Could you give us an update on your analysis of the concentrated short positions that are still existing on the COMEX for silver and gold particularly?
Well, I'll tell you, the short positions held in the futures market and the COMEX, haven't really changed a lot, say, in the last 5 or 6 years. I mean, there's still huge, monstrous short positions against gold, silver, platinum, and palladium, but the big one is silver. It's absolutely enormous. I think there's something like 400 million ounces silver sold short in the COMEX by 8 traders, and it's just incredible. The one thing that has happened in gold, the short position is still outrageous in gold, but what has happened is that over the last 7 weeks, the largest 4 traders, have reduced their short position from like 198,000 contracts down to 134. That's a lot. And I think a lot of that has to do with deliveries. They've been delivering all this gold, for months on end, and it's starting to show up as, every time there's 2 ways to reduce your short position. You buy a long contract on the COMEX and that covers your short position, or you can deliver into it. So if you're delivering gold into a short, if you're long and you add demand delivery and the short delivers, so that automatically cancels the contract. So there's been lots and lots of deliveries out of the house accounts of all these bullion banks, and most of them are the big 4 like JP Morgan and Wells Fargo and HSBC and Standard Chartered, PNB Paribas out of France, and it's just been amazing. So we've seen that reduce, but the short position is still grotesque. And it's, as Ted Butler so correctly pointed out, over the last 25, 30 years, the short positions held by these 4 and 8 largest traders, all of which are bullion banks or investment houses, is the sole reason why the prices of the precious metals are what they are today. We're all happy with $3,000 gold. But if we ever had a short covering rally where the shorts were forced to cover, we'd see silver at over, a very large 3-digit number, and gold at a price that none of us can, certainly over $10,000 on a short covering price spike. And the only question is if that was allowed to happen, and if like the CME group allowed it to happen, it would bankrupt an awful lot of bullion banks and investment houses. And so that we're having this slow creep up in price, but the short position is still ugly. And until that changes, we're going to see this big creep up in price. But there's all kinds of potential for a price explosion if the short covering gets out of hand to the upside.
How about that in a multipolar world? We've certainly, this by analogy with the US dollar, the COMEX was kind of the only game in town for a while, but with not only London, but now with Shanghai and Moscow and other physical markets opening up, how does this game that we're discussing of the short position in COMEX still so strongly affect the global spot price for the metals, and do you see that changing?
There's no question about it that the COMEX is becoming very, very vulnerable because of the short position they have, and so is the LBMA. These are paper markets. We're talking about the Anglo-American Empire that's been running the world since early 1800s, 1800s. So for 200 years, the Americans and the Brits have ruled the world. They've controlled trade and commerce and you name it, militarily, financially, industrially, the whole 9 yards. Well, this whole thing is coming to an end. And the rise of China in the last 20 years is, we've all seen this happen, and now they're a superpower in their own right. And the West is starting to fade. And there's no question about it that sooner or later the pricing is going to switch from the paper price that we see that's manufactured by the LBMA and the COMEX every day, because that's where the price is set, is in the COMEX futures market. One of these days it's going to fail for the reasons we just discussed, where they have a huge paper short position and the price will finally rise enough where, it'll blow the paper markets out of the water and they may be forced to suspend trading on the LBMA and on the COMEX or close the exchange down altogether if it threatens the shorts. And if that happens, then automatically the pricing will go to another exchange. And there's only one exchange left that trades completely unphysical, no paper allowed. You got to have the gold to trade it, and that's in Shanghai. And I think, it's without question, whether it be this week, next month, next year, or whatever, at some point, the paper trading schemes of the Anglo-American Empire are going to crash and burn. You can see the United States is already slipping as a superpower. Britain hasn't been a superpower for 100 years. And empires come and empires go, and we're watching these two slide down the drain, and it's only a matter of time before the inevitable happens, and China becomes the number one hegemon in the world. And, of course, he who has the gold makes the rules, and widely believed that they have north of 20,000 tons of gold, and they will be setting the price then.
Is it in the best interest of China and their circle of influence now to not rush this process? Is there a benefit to them of the artificially low prices at which physical metal is being able to be off-taken from the Western exchanges?
I'll tell you what, that's pure speculation if I said anything about that. The Chinese and the Russians play a long game. They're not like the West, where it's instant gratification, instant result. They want instant profit, etc. You take a look back at Chinese history. Yes, dynasties have come and gone, but they've always played the slow game. And this time is no different. And you take a look back at 2008 when they started accumulating gold seriously to what they have today. 2008 to 2025 is 17 years. We think that's a long time, and we wish they'd get on with it. But they have their game plan. And they're going to play it out, whether it happens, like I said, this year or next year or whatever. But they're going to end up controlling this. But they're playing the hand their way, and we'll find out. We'll wake up some morning and they'll disclose their true gold holdings, or something else will happen, and London and New York, and then New York will fail, and automatically go to them. But like I said. He who has the gold makes the rules, and they have it. And one of these days, at the time of their choosing, they'll let us know.
In addition to these unprecedented physical flows of metal across the Atlantic and off of the COMEX, where does that leave the COMEX in terms of deliverable silver? Some have said that the stockpiles there are getting notably, or perhaps even to record low levels, that you just can't keep playing this game in the direction that it's going currently very much longer.
Oh, there's no question about it. This is especially true in silver. This has been building now. Ted has been on the silver market now, for almost 40 years. And we've seen slowly but surely, in the last 25 years that I've been watching this, is that, silver inventory is going down, 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 down. And right now, they're down to the last maybe a few 200 million ounces in London. And this drain, which, it's continuing. For March so far, and I've got the number right here, from London, 2,200,000 ounces of gold is deposited in the COMEX up until today. And in silver, it's 36 million, almost 37 million ounces of silver has been brought in from London in the first 7 trading days of March. You just can't drain, an exchange like that forever. Like there's 58 million in February and 45 million in January. And sooner or later, you're going to hit the bottom of the barrel. And we're in a structural deficit in silver for the last 5 years. This is the 5th year we're into now. And I don't care how you slice it or dice it, even if I think the Silver Institute said that we're 200 million ounces or something like that. We're using 200 million ounces more per year than it's being produced. Well, you just do the math. 5 times 200 is 1 billion ounces. And how many more months is the London market going to be able to supply this? And my opinion is that it's not much longer. And, but they're playing this game right down to almost the last good delivery bars, shorting the market and keeping the price down. I'm looking at silver right now, and it's $33.89 an ounce, up 3 cents. We're actually, if it was a true price right now, it should be $338.90 an ounce, would be closer to its true free market price. And one of these days, when they declare force majeure, which they're going to have to do sooner or later, that will come about, and then everything will get repriced, and it will be a great reset. That's for sure.
Ordinary people try to make prudent decisions to protect their family's financial future. Your big picture view amidst, you mentioned a lot of things that are happening, some of them unprecedented levels. You talk about strains, structural deficits building in the system that they're simply unsustainable, etc. Does it remain, in your view, a important and prudent action for people to get a hold of physical tangible assets such as gold and silver to help reduce the risk of all of these unknowable or unknown moving tectonic plates in the world between the East and the West, etc., as we move forward into this uncertain financial future?
Well, all you have to do is look at the deliveries in gold and silver in the last 2.5 months. These are the big bullion banks, the huge financial institutions moving tens of billions of dollars worth of gold and silver. They're moving it for a reason. And if they're loading up, if they're taking delivery of, tens of thousands of contracts of gold and silver, it might be prudent for the average person to maybe do the same thing and go down to the local bullion store and pick up a few silver rounds, whatever they can afford, whatever they feel is prudent. But, in the end, all that will be left in the world is tangible assets, as everything paper burns, and that includes the bond market and the stock market. And through all of recorded history, gold and silver have been money, and they are today, and they will be in the future. So if you're going to protect yourself, the only way to do it is through hard, tangible assets, and the king and queen of those are gold and silver. And I've been buying this stuff since 1997, and I've protected myself and my family, and I urge as many of your listeners to do exactly the same thing as soon as possible, by the way.
Ed, you also write on a recurring basis, and people can avail themselves of your ongoing analysis because you've got your finger to the pulse of this as these things develop. Where can they get connected, and how would they be able to take advantage of that?
Okay, well, I write a daily column. I've been writing on the internet since 2007. And my daily column is called Ed Steer's Gold and Silver Digest. Just Google my name, Ed Steer, S-T-E-E-R, Gold and Silver. My website will pop up. And there's a tab on there where you can look at a free sample column to see what you get for your money. I write a column 5 days a week, and you get about 260 columns a year. And the freight is US $100. Pretty cheap.
Ed, our viewers and subscribers are always grateful for your presence here. I wish we had started having you on much earlier than we did, but I'm grateful that you've been willing to come on as often as you have. I know it's a gift of your time because you're busy doing your newsletter, to take out the time to spend a few moments with our audience, and we're grateful for that. Folks, if you don't want to miss out on anything from Ed, make sure you check out his site. We'll put a link to it in the description of this video. And also, if you don't want to miss a single interview with Ed here on Liberty and Finance, make sure you're on our free mailing list. You just go to libertyandfinance.com, Liberty and Finance, all spelled out, all one word, .com. Put in your email address, click submit, make sure you do confirm on the confirming email, and you're opted in. You'll get 1 email per day. We don't share your email address with anyone, and you won't miss a single episode with Ed Steer or any of our other guests or any of our weekly specials. Ed, thank you as always for joining us here on Liberty and Finance.
Entirely my pleasure, Dunnigan.
This is Kaiser Johnson with Liberty and Finance. With premiums on US 90% silver constitutional coinage at multi-year lows, this may be an ideal time to swap silver bars or rounds for 90% silver and gain all the benefits of US mint lineage, legal tender status, non-reportability, and fractional utility. So right now we're running a special where we will swap any of your silver bars or rounds for 90% constitutional silver at a minimal premium difference. Call us for details.